Hey, what's happening? This is Jerry over at Wealth Dynamics. Hey, I want to give you a quick video today, my daily money clip. I want to answer a question that came in from a client of mine, Jason. He wanted to know, what are my thoughts on foreign currency trading, otherwise known as Forex? So I'm going to cover a couple of things here, but I want to give a little bit of a background on Forex first. So if you look at it today on social media, it looks like a new fad because everyone's on their phone. Everyone is doing some kind of Forex bot, and they're doing trading signals, and it's all automated, and it seems like an easy way to make profits and stuff every day. It's not a fad. So it's actually been around since ancient Babylon. It's like 5 or 6 thousand years old. Okay, so there used to be hubs like in ancient Babylon where different civilizations would come together. They would trade, and that's for them, that was currency. If I had wheat and you had corn, that was our currency. Sometimes it was metal, sometimes it was actual commodities, but they would trade, and that was foreign currency trading. And that system went back all the way to that date, like 5 or 6 thousand years ago. Now, if you fast forward into modern day history, in the late 1800s, it was popularized by JP Morgan in the banking industry. So JP Morgan is the namesake of JP Morgan Chase Bank. Right now, I think it's the largest bank in the United States. And so what he was doing is he was privately trading foreign currency. So he would just, with a newspaper and a telegram system, he would wire in his trades. He would, do all of that as almost a hobby to make money, which is how some people do it today. Okay, but what he noticed is he was able to make a lot of money fast, and he had enough money in his accounts that he could actually make the market. He can manipulate it up and down pretty easily. And so he took that system of foreign currency and he integrated it in with his banks. Okay, fast forward to today, foreign currency trading is a $5 trillion daily market, meaning that's the volume of financial activity happening on that market as an exchange. Okay, that's the largest market. It's bigger than stocks, bonds. It's the largest market out there, which means there's plenty of room for trading and lots of places to go make money. Now, if you look at it, though, to tie this back to JP Morgan, the number one player in that space are banks. Okay, the largest banks in the world, they're the number one traders of foreign currency. Number two is hedge funds. Okay, so if you look at this from the standpoint of a place to make money, a place to speculate, a place to invest, I want to be pretty protected when I go in there. Any foreign currency trader that's done live trading will tell you these banks, and you don't know who's making trades when, but these banks and institutions, they swing the market up and down. That's why they're called market makers. Okay. So if I have a multi-trillion-dollar portfolio made up of banks and hedge funds in that market, and I have $1,000 on my phone on a Forex bot, I'm going to get crushed. Okay. So with Forex trading, this kind of goes into the groups. There's different groups of foreign currency trading. You can do it as a fund. That's what I do. That's what I recommend my clients to do. Now, this is reserved for accredited investors and sophisticated investors. But a foreign currency fund means that there's a professional trader that runs a successful trading business, has a track record, and he or she will take on investors. You can invest in their business through a fund. They'll do all the trading and they pay you out a profit. Okay. That's how I like to do it, because I'm not going to learn trading. That's the other way to do it. You can learn trading. Okay, but that's going to take you, the best trader that I know personally, he's been at this for almost a decade. Okay, and he's successful now. He makes 50 to 80% returns annually on a very regular basis. But he spent years and years and years first learning trading with options and doing it in demo accounts, and then learning about Forex and doing that in demo accounts, and then making money and then losing it all and then making it all and then losing it all, until he finally got a consistent 5-year track record of profitability and started then taking in investors. Okay, I don't want to do that because I run my own business. So I could learn foreign currency, but it's the equivalent of going to college. I'm going to spend years mastering it. So I want you to realize that a lot of people get into it as like, this is get rich quick. Any foreign currency trader worth their weight in anything is going to tell you it's not get rich quick. Okay, there's a strong barrier to education and success. And it's one of those things where you're winning until you're not. So for me to like win and have positive trades for 6 months, that's great, but it doesn't mean that I'm going to keep doing that. Markets change. So that's the second way to go about it. The third way is as a passive, I don't know what to call it, a passive victim investor is what I'll call it, on the bot, right? So if I have a bot, I don't have any control over that. So I don't recommend foreign currency trading on a bot. I'm not in control of it. It's a bot is a piece of technology that's preloaded with various outcomes. based on this market behavior, the bot's going to do X, Y, and Z. It can't think, it's just automated. It's preloaded with a number of different things that it might do. It's no different than, a many chat where there's an A/B system of if they say this, then the bot will respond with this. It's no different than Instagram. You used to be able to have bots on Instagram. Okay. Based on the algorithm, your bot would follow this many people and send this many messages. Now, the problem is the bot is only based on the preloaded responses. Okay, so if the market changes, the bot is no longer valid. It's only valid based on what existed at the time it was created. Now, you may see bots that are monitored by a professional trader, but here's the thing: is if I'm working with a professional, and that professional is trading my money for me, I want them running that as a business. I don't want them plugging it in into a bot and then saying good luck. I'll check on it once in a while. That's not what I'm investing for. So that's why I like the fund option. Okay, maybe someday I'll learn Forex, but I'm not going to now. There's way too much I have going on that I could be doing with my business. And that would be a violation of the affluence formula that I follow on my business is successful. Why would I try and spend a period of time on learning another activity? Okay. Now, the final thing I want to cover here, the third group of investing in a fund is the only legitimate way that Forex is actually an investment. Okay. An investment means that I took capital and I put it into a venture, and that venture paid me as an investor. I didn't do any work. Okay. So on the second group, if I'm doing all the trading, that's not investing. That's actually work. That's a self-employment activity or a business activity. It takes my time. Remember, we're trying to stop trading time for money. Okay. Forex is still trading time for money if I'm the one doing the trades. If I'm doing a bot, sure, it might be passive. Like I just put the bot on my phone and upload some money and hope it does well, but that's speculating. Okay, I don't have a human being running that business. There's no track record with it. The bot is again a piece of technology. I wouldn't buy a McDonald's franchise and instead of hiring a general manager, put a robot in charge. I would maybe use the robot to flip burgers or to dip the fries, but I'm not going to have it in charge of the function of the business. Okay, so that's my thoughts on foreign currency. So again, it does have a track record. It goes way, way back. It's something that I think is great, but it's at that marker of being a sophisticated investor where I have a $250,000 net worth or more, and then I can start investing in foreign currency. And it's a great way to invest in a sophisticated fund. You can make 20 to 30% returns. That's not a guarantee or an offer of any sort, but that's what I've seen. Okay. If you're accredited, you can be putting it into an accredited fund. You might make 40 or 50%. Okay, accredited means that I have $1 million net worth. That's annually 40 to 50% on that investment. If I'm what's called a qualified purchaser, which is a $5 million asset base as an LLC, a trust, or a corporation, I can do it in a traditional hedge fund where I might make a 60 to 80% return. Okay, that's what banks do. So I'm going to just tell you guys, banks are not doing bots. Okay, banks are not doing it themselves. Banks hire professionals. So if you're interested in Forex, again, that's an investment that happens up at this phase. It's usually going to be the fifth or sixth phase on wealth building on your blueprint to freedom. And if you're not on that fifth or sixth phase of being a sophisticated investor or an accredited investor, don't worry about getting into Forex yet. Okay. Handle your debt, get solvent, handle your taxes, like get all your baseline stuff covered, get enough passive income to where you have, passive income coming in, you're saving 40% of your income when it does come in, and you've got at least a $250,000 net worth. Then you can make the jump into investing into Forex. Okay. Not hiring a bot. If you do want to learn it, great, but that's a job. It's a job. It's a self-employment activity. That's a totally different thing. Just like if I was going to learn how to sell real estate or insurance. So that's what I have for you today. Make sure that you like, share, and subscribe on these daily money clips. By the way, I do love answering your questions. So if you have a question that you would like me to address, submit it in the comments. You can also email it to me at jerry@wealthdynamics.com. Thank you again. Like, share, subscribe. I'll talk to you next time.